Okay, welcome to Dow Stock Talk, where I talk about topics relating to investing in finance, but more specifically, the stock market. And today I'm going to do a stock analysis on PayPal. If you're not really sure what PayPal is a financial tech firm that allows you to send, receive, and make payments, as well as create merchants accounts. Lately, you might be under the rug. PayPal has taken a huge hit lately, and we're trying to decide whether we should buy the dip. A lot of tech companies has been dropping significantly, so I thought I would do a stock analysis on tech companies that end up dropping a lot. So in this video, I'm going to be going over a company overview, key highlights, streams of income, competitive advantage, technical analysis, my personal insight, and whether I think PayPal is a buy. But before we get started, make sure you smash the like button because it helps the YouTube algorithm. It helps YouTube know that this is quality content and help my videos reach a broader audience. And also, if you're a big fan of finance and investing, make sure you check out my store, Wall Street Stock Apparel, where I make custom finance and investing t-shirts. And also, I created timestamps so you can skip around to your liking. So let's check out PayPal. So PayPal has taken a major hit lately. As we can see, 1 month down 15%, 3 months down 47%, year to date down 48%, and 1 year down 60%. That is a lot. Now, a lot of people may be wondering, why did it go down so much? Let's check out some recent news. So this is just some recent news that kind of lets you kind of know the current state and what kind of actually happened. And pretty much this was one day, this was about in February. It dropped over $50 billion in market value. And I'm just going to highlight some key points. PayPal plummeted 25%, $133 per share from its record high, which was $360. Now, the plunge for the PayPal share was the fastest drop ever. So what were some of the catalysts that end up lowering the stock price? So first off, we have as far as revenue growth. Revenue growth is expected to grow at a much slower rate. So instead of it growing what analysts expected 18%, the revenue growth is 15 to 17%. Also, we see a slowdown in users growth. So a lot of times I'll go over how they make their money, but that is a key thing you want to look at. And another thing, with higher inflation, consumers may be spending less, as well as ongoing supply chain issues. And last but not least, a company is losing a lot of their business because eBay has decided to move their separate ways and pick a separate payment platform. So that consists of 3% of PayPal's total revenue. So that can definitely impact the business. Also, the concerns is because of the pandemic, a lot of people may be thinking the pandemic may have gave false impressions of future earnings or future revenue, simply because a lot of people were staying at home thinking that the pandemic was PayPal's best years and it could be on a decline. Now, I'm just going to briefly go over some PayPal statistics that you want to pay attention to. As you can see, PayPal has as of 2021, PayPal has 392 million active users. That is important because I'll show you why a little bit later, as well as 29 million active PayPal merchant account. So that is also a big one. And I want to go to this one. More than 1.6 million websites use PayPal, and consumers are 54% more likely to buy from an online store if they accept PayPal. Okay, so I normally always go over streams of income. So how do PayPal make money? Well, let's scroll down to end up seeing. So this is 2020, so the percentages is still roughly the same. So that bread and butter, 93% comes from transaction. So anytime they process payments, they take a very, very small fee. So the other one is 7%. The 7% comes from other value added. So the more volume and the more activities as far as transaction, the more money PayPal will end up making. Now, as far as the other alternative, they have referral programs, partnerships, subscriptions fees, and they have gateway fees. I'm not necessarily sure what that one is. And as well as they also provide small loans to customers as well. Now let's go over PayPal revenue and some usage statistics that is key as far as PayPal growing. So as we can see, the revenue has been increasing nicely. So let's end up showing what the actual numbers would be. So from 2010, 3.5 billion, 2013, 6.7 billion, 2016, 10.8 billion, 2018, 15.4 billion, 2019, 7.7 billion, and 2021 we had 25 billion. So it is, as far as revenue, growing very nicely, I must say. Now let's go off of profitability. So in 2012, 0.8 billion. From 2014, I'm skipping year to speed up the process of the video, is 0.4 billion. In 2008 we had 2 billion. In 2009 we had 2.4 billion. 2020 we had 4.2. Now this may be one of the major concerns, but it was only 1 year. The 2020 was the pandemic. Because people may be shopping online less, we may have seen that small pullback as far as the money, but that's not that big of a deal. Now transactions here, remember, they make all their money from transaction. They charge a small fee per transaction. So we really need to see, this is key, we really need to see these transactions increasing nicely. So, and we had in 2013 3.2 billion, in 2016 6.1, 2019 12.4, 2020 15.4, and 2021 19.3. So that is good that we see transactions increasing year over year, because this is their bread and butter. 93% of their income comes from transactions, so that is good. Now let's go off of volume. That means like the amount of payments that is kind of going through altogether. We also want to see this number increase as well. Now, as we can see in 2014, 235 billion, 2018, 578 billion, 2020, 936 billion, and then in 2021, 1,250 billion dollars as far as payment volume. Now, if we're just looking at the operating margin, so that's about 20%, has been about 20%, let's just say. And yeah, for operating income, 20% given to this business, I would say that's probably normal. And okay, this is another one. So PayPal users. So we would like to see the PayPal users increasing year over year. So as you can see, we had PayPal users increasing nicely. But if I end up showing you a little later, we're going to end up seeing that the PayPal user growth is slowing much more than it has before. But there's a reason for that. Now let's jump into Simply Wall Street, where we're going to do the rest of our analysis from. And also, as far as competitive advantage, as far as competitors, we can go with Visa, MasterCard, Block, which is kind of the Square. Also, you have to remember other competitors that offer payment process like Google Pay, Apple Pay, even Shopify, like WePay, any type of platform that offers a way that you can end up paying, they will be a competitor. One of the competitive advantage is that most people, when you think of a safe way to process payments, a lot of people may automatically think of PayPal. So we can say one of their moat is they have the network effect. A lot of people are familiar with PayPal. PayPal has been around for plenty of years, so a lot of businesses and consumers end up trusting PayPal. It doesn't necessarily have to be the best, but as long as they offer a great service, a lot of times they most likely will be around. But like I said, the fintech area is getting very competitive. So that is, when we flip over to risk factors, it is getting a very competitive market. As far as you got the crypto also makes it easier to transfer payments, which makes that PayPal, as far as the transaction fee, they may over the years start to decrease as well. Like we said, for the risk factors, slower growth and the revenue and PayPal users. So these are some of the risk factors that may come into play. Now let's do some assessments. Let's look at the evaluation. So as we can see, the evaluations, a lot of times this is based off of projecting future cash flow and then discounting it back to the present day. As we can see right now, according to Simply Wall Street future cash flow projection, 66, its fair value is $290 and its current value is $96. So they're saying compared to future cash flow, it's undervalued. So from a value investor, this may be a bargain. Now, I also want you to know that a lot of the discounted cash flow is based off of future growth, which is kind of hard to predict from evaluation. But we have to also look a little deeper to see is there any particular concerns going forward. But from a valuation perspective, it is definitely saying that it's undervalued. Now let's go over the earnings. So as we can see, and by the way, if you're not familiar with what these metrics is, make sure you check out my suggested video. So if we're looking at the price to earnings ratio, it's comparing the stock price compared to the amount of earnings. So as an value investor, the lower the number, typically the better. Now, if the higher the number, it's just expecting that investors are expecting future growth or earnings to be much higher. Now, as we can see, the company's P/E ratio is 27. We see the industry, so it's about even with the industry. But as we can see, the market P/E ratio is 15. But so as we can see, the P/E ratio, I'm not saying anything it's that impressive. But like I said, it's about the same as the industries. Now, if we could see it lower than the industry, as far as that would be a good sign. Now, let's go over to future growth. Let's see the future growth, because this is the things as far as companies, as far as tech companies, you definitely want to pay attention to. PayPal is forecasted annual growth according to Wall Street analysts 13.7%. I think that number is fair, as well as forecast annual revenue growth, which is 15.5. I think that is fair, and it's good because their growth, their future growth is supposed to be higher than the industry and the market, so that is good. Now, the only thing I would like to say is for growth stocks, you would like to see the revenue grow over 20%. And that's why, as far as high revenue growth, they mark that with an X. And the earnings, like I said, they're expected to grow 13%, but not significantly higher than the industry. And as you can see, this is the revenue growth over the years and the projected revenue growth. So by 2023, its revenue is expected to be $35 billion, and their earnings is supposed to be $4.8 billion. Now let's look at free cash flow. The free cash flow is in the purple. Earnings will be in the green. We always like to see free cash flow going up. I just like to look at the overall trend here. So that looks good to go. And let's look at cash from operation following the cash flow as well. That's something I would definitely like to see. Let's check out the financial health. So for the financial health, this is great. Short-term assets cover short-term and long-term liability. That is a plus. Let's see how much debt PayPal has and first amount of cash. So that from a financial perspective, they're looking nice. They have more than enough cash to cover their debt, and they have a lot of equity. So that is a very good thing to see. And lastly, I like to look at this from an inside trader. As we can see, in the past 0 to 3 months, the past 0 to 3 months, there has been a lot of buying by individuals. So that is normally a good sign that we like to see once we see the price end up decreasing. Okay, and let's also look at the ownership breakdown. So institutions really control the stock price. So 77% comes from institutions, 22% comes from the general public, and the insiders is 0.1, state and government 0.04, which is insignificant. It comes in favor with institutions. We should see the stock price increase very nicely. But let's look at it from a technical perspective and see just to get an idea. Okay, I'm just giving you an idea looking at it from a technical perspective. Now, as we can see for the RSI, normally when the stock price definitely goes down a lot, it's always going to be outside of this particular range. So from a trader, that can end up indicating that it's oversold. So these are some of the things I'm just kind of getting you an idea of what traders might look at. Also, a lot of people look at moving averages. If you can see, the 200-day moving average is green, which it's below the 200-day moving average. As we can see, this is what they call the death cross, which is never good. That's when the 50-day moving average drops below the 20-day moving average. So every time you see stuff like this and the 50 is about to go below the 200-day moving average, that means all momentum is lost and we're on a downward trend. Now, as we can look at it from an investor's perspective, remember we're kind of looking at it from how the company is doing overall from a business perspective. But as we can see, as far as the technical analysis, we see that there were key supports around that, say, $70 mark. So that means a lot of buying power, a lot of pressure for buying could occur at this particular levels, because the last time it reached this level is 2017. So we've seen the stock price hold a lot since then. That means around that particular price, we should see a lot of buyers there. It's down to 70. I probably will buy a lot more, because then from a technical from a technical analysis perspective, it's more likely that even traders will hop in this wealth and we can at least see a bounce back up to 90 mark, even for a short trade. So like I said, I'm trying to broaden my video so you can see things from a different perspective. This was their earnings report that came up. I definitely want to cover some key points from this one. As you can see, when I talked about earlier as far as revenue growth, their revenue growth was projected to be at revenue growth as 18%, but as you can see, they're only projecting the revenue to grow 15 to 17%, as well as you looking at the total payment volumes growth 33%. Now they're expecting it to be 21 to 24%. The slowdown in total payment volume is a concern, as well as the slowdown in revenue growth. This is one of the things that I definitely wanted to talk about earlier as far as the competitive advantage. The most accepted digital wallets, as we can see, PayPal is 76%, but we also have some key players that you cannot ignore. Apple 27%, Amazon 15%, Google Pay. So it's a lot. Shop Pay, Afterpay. So there's a lot of steep competition that can end up eating away from that 76%. So also keep that in mind. It is a very competitive field. And also, as we can see, the total payment volume and revenue trends, as we can see, and this is year over year. So we're still seeing double digits. We have seen a decline, that the pandemic was a very unique year. And also, we also have to keep in mind the eBay representing 3% of their revenue. eBay representing 3% of their revenue. So just to keep that in mind. And as time goes on, this number will be less. But in their earnings report, they're already and factor into numbers excluding eBay. I like that. That's a good job. And as we can see, like I said, active accounts before was in 20% double digits, but now we've seen the active accounts as far as increase is at a much slower rate. And as we can see in the quarter, new active accounts has been decreasing. But the good thing is, I wanted to say this earlier, the people who are already on the platform are actually spending more and doing more transactions. So you can also think about quality over quantity. Now let's see, I like to check out what some other people are saying. By the way, Yahoo, I'm trying to shorten the video. Yahoo is saying that it's a buy. So as we can see, some analysts, 37 Wall Street analysts, and the stock price with their forecast in the next 12 months. The low side is 107, the high side is 243, and the average is 182. Those numbers sound about right. As far as the high side, I think the highest side on PayPal would not be 245, but probably I want to say like maybe $200. This 182, I don't know exactly as far as the near term for 12 months, but these numbers, these ranges seem about right. Like I said, my overall personal insight about PayPal is, to me, it's not the strongest, but it is a very good company. And this is the type of company at the particular price point. If I see a good price for it, it's not like a Google or Amazon, but it's still a pretty strong company. It's still a really good company. And for the price, I actually like the price. So I would say it's a buy. Now, the thing about it is, just keep in mind that we can see PayPal, from even if you're looking at a trader perspective, it still can fall more, probably to the $60 or $70 mark. So just keep that in mind. But if you have a longer time frame, if you're looking at 3 to 5 years, I definitely would consider it a buy. Also, just keep in mind though that it is a very competitive field, that it could go down, especially if the overall market continues going down. I think it could go down to $70, but you never know. In investing, crazy things particularly happen. But like I said, I think it is a buy. I do think there is some serious risk, especially with crypto over a longer period of time, making transactions lower, as far as slower growth. So there is a lot of legit concerns, but I think that the market has definitely overreacted in such a short period of time. I will be picking up some shares here and there. If we do see a short increase, let's just say PayPal goes from 96 to about the 156 mark, 130, even probably 132, I'll end up selling some of the position, because when I did my numbers, I say it's about 200, and because I got it in such a low price, I definitely want to lock in some particular profit. So I'll probably end up, if we see a fast recovery in the next year. If we can say it goes to 170, 180, then I'll probably will end up selling it, because at that particular price, if it goes from like I said, let's say 96 to like 180, I would have doubled my money already. Let me know in the comments below, what do you think about PayPal? If you haven't already, make sure you hit the like button. If you're new, make sure you subscribe to my channel.